1 second. Hello, 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 hello. Can you hear me now? Hello. Hello, hello, hello. Yay, great. Awesome, we fixed it. There's always going to be technical issues some way or another, isn't there? It's always a challenge. Anyway, let's get back to what today's subject is. Now, today we want to talk about what tariffs are and why it's scaring the market so much, why it's dictating everything about what's going on in the market at the moment. Like I said at the beginning, the market tends to focus on one story at a time, and today's story is definitely about the markets. And like I say, we're going to talk about what actual tariffs are, because so many people hear the word tariff, they don't actually know what it is and what the impact that could potentially be to that. So they don't actually understand it and why it scares it. So anyway, first things first, a little bit about myself, okay? Like I say, my name is James Trescothick. I am the head of market research and market analysis here at One Royal, okay? Now, I've been in the financial service industry for 20 years. 20 years, actually more than 20 years, to be honest, because I'm actually 46. I started when I was 18, so I am an old man. I started off as an independent financial advisor in the UK, where I specialized in mortgages and commercial finance. I then entered the world of trading back in 2006, where I traded gold options through Dubai Gold and Commodity Exchange. Okay, I'm talking about real options. I'm not talking about binary, that muck we had years ago. I'm talking about real options, okay? Now, I worked for several well-known established retail brokers. I was a portfolio manager. And of course, then I moved into education. I'm technically now an educator, okay? And I've been a trading educator for over 10 years. And I'm a pretty well-known public speaker. And I've published writer as well on some of my analytics and things like this. And, you know, I've spoken on many expos, seminars all around the world. Now, one thing you must know about me, because I talk about it a lot, is that I'm a massive gold bug. I love gold. I love gold. Now, the reason why I love gold is because it's the very first asset I ever traded. Go to show how old I was. When I started, gold was trading at $636 an ounce. That's how old I am, okay? And that's why I love gold in particular. So that's a little bit about me. Now, this is the agenda, okay? We're going to talk about what actual tariffs are, the history story of tariffs, the impact tariffs have on the global economy, the implications of tariffs on the market, and of course, then we'll do a question and answer. But before we get into the core of the subject, don't forget these little webinars or videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Okay, so what actually are tariffs? The big question. It's the talk of the street. Now, tariffs or custom duties are taxes imposed on foreign goods and services. Okay, it provides additional revenue to the country's government who has imposed those tariffs. Plus, it offers protection to domestic producers. Imported items become more expensive, allowing businesses at home to become more competitive. Let me give you an example, okay? Say country A is a developed country, okay? And it can produce a mobile phone for $900. Country B, on the other side of the world, however, is an emerging market, okay? It has cheaper labor laws, okay? And can produce mobile phones for less than that, for $800. Now, country A, to protect its domestic producer, imposes a tariff of, say, 25% on the country B's mobile phones, now meaning that they cost $1,000 to the consumer. The idea, again, is making country A's products more competitive. Okay, so compete with country B because they can do it for cheaper because they've got cheaper labor laws. Now, there is other reasons why countries put in tariffs. Okay, they also raise revenue. They raise revenue for governments. Okay, this is called revenue tariff, and is not designed to restrict imports. Instead, it's designed to raise more money for the government. For example, okay, between 2018 2019, the Trump administration, Trump 1.0, because we got 2.0 now, the Trump administration initiated tariffs on many imports to rebalance the trade deficit. What does the trade deficit mean? Basically, if one country is exporting or importing more, there's a deficit. Okay. In 2018, these tariffs, sorry, it's easy for me to say, generated 41.6 billion in revenue for the government. In 2019, these duties generated 71.9 billion in revenue. So as you can see, it is also put into place to raise revenue for the governments. In many ways, you can argue this is what Trump is trying to do at the moment, is increase revenue by using tariffs. It's one reason why he's doing it, so he can do tax breaks. That's the other theory behind it. Now, like I've said already, governments use tariffs to protect certain industries and to protect companies and to protect jobs. Example again, in 2018, the Trump administration imposed 25% tax on steel being imported from all countries, with the exception of Canada and Mexico. Reason we didn't pick on Canada and Mexico back then is because they had their own different trade agreement. That's changed now, obviously, as we know in the news. By protecting, the other reason why they do it is because they obviously protect national interest. Okay, by making goods being imported more expensive, it can also make domestic products more attractive to the consumer, securing protection for domestic companies and jobs. Tariffs can also be used as an extension of foreign policy, and they can be used to exert economic leverage. In many ways, you can argue this is what Trump is doing at the moment. Because don't forget, let's go back and have a look. At the weekend, okay, Trump said he was going to put 25% tariff on Canada and Mexico, starting from yesterday. However, because they agreed to spend more money on border control, he's given them a month reprieve. So in some ways, you can say tariffs are used to exert economic leverage and part of a negotiation skill. There's another example. Again, this is why tariffs can be used for negotiation. In 2022, with the outbreak of the Ukraine and Russian war, the Biden administration raised a 35% tax on Russian imports that were not prohibited by the April suspension. So basically, obviously, they banned sort of Russian oil anyway, but other goods that Russia made, they put a 35% tariff on it. Again, this was a way of trying to stop them from carrying on the war. So again, it's another example how it can be used for political influence. Now, tariffs, of course, this is why the market is also very scared, has side effects. Okay, has horrendous side effects. Number one, tariffs can make domestic industries less innovative. God, what's wrong with my words today? I'm getting my tongue tied. I'll start that sentence again. Tariffs can make domestic industries less innovative by reducing competition, which makes sense, So you don't have to. If your product is now cheaper because of the tariff, you don't necessarily need to think outside the box. So yeah, Tariffs can hurt domestic consumers since less competition can lead to higher prices. And this is the big thing. We'll talk a bit more about this because this is the big thing. That's inflation. Okay. It hurts the consumer. Remember, it hurts the consumer. Number three, tariffs can generate tensions by favoring certain industries over other regions. I'll give you an example, okay? A tariff, say, is put on to help manufacturing in a built-up area, okay? This can hurt consumers in, say, rural areas, as they're not benefiting from obviously the tariff breaks, but they're going to be paying more for goods. So it can even create divide in a country. And finally, like I said before, I've already mentioned, tariffs can be used to press on a rival country, which can result, and this is the big one, in retaliation, known as a trade war. And that is the thing, that trade war is the thing which is scaring the market. Let me give you a history lesson to show the example of this. Okay? There's a famous example of a trade war, and it's called the Chicken War. And this happened between 1961 to 1964. Now, do you know why, for example, light trucks are cheaper in Canada than they say are in the USA? You'd be surprised for the reason for that. And the reason for that is because of chickens. Chickens. Following World War II, chickens were a real delicacy in Europe. Okay, they were cheaper in the United States, but they were expensive in Europe because obviously they're just recovering from World War II. So it was a real delicacy. Now, due to better farming practices in the US could produce a great number of chickens and export them to Europe. Now, of course, this made people in Europe very happy as it brought down the cost of chickens. However, it didn't make everybody happy. In fact, it upset European chicken producers because they weren't happy at all because obviously it was affecting their profits. So they imposed tariffs on US chickens. Now, this also hurt chicken producers in the United States. Okay, so began what is known as the Great Chicken War between 1961 to 1964. During this time, it was such a pressing issue that they even stopped important Cold War meetings. But bear in mind, this is during the Cold War meetings to discuss the chicken war. In fact, the German chancellor at the time reported that half his conversations with JFK, John Fitzgerald Kennedy, was about chickens. To retaliate against these tariffs imposed by the European chicken producers, President Johnson, who took over obviously after Kennedy was assassinated, he imposed a 25% tariff on products coming from, he put a 25% tariff on all products coming from Europe, which included potato starch, brandy, and light trucks. Now, this in many ways hurt the US just as much as it hurt Europe. Okay, and in fact, a Harvard professor, Robert L. Lawrence, he said the chicken tax crippled the US automobile industry by insulating it from real competition in light trucks for 40 years. So quite often these sort of trade wars, like the chicken war, they're not, they have long-term implications. Long-term implications, So, you can even have a look at the inflation crisis that we had back in 2022, which we'll talk a little bit more about in a minute as well. That was not helped by the initial trade war, which we had in Trump's 1.0 administration. So again, here's the question. Okay, who really does pay for the tariffs? Because you ask quite a few people, um, they always think it's like when Trump says I'm going to put 25% tariff on Canada, they think Canada's going to pay it, but it's not Canada. You know, when he says I'm going to put 10% tariff on China, China doesn't pay it. They've already got their money. The people who pays it is the people who buys it. Okay, which means it's the US company buying the goods, and of course that's more expensive for them. And who does that go to? You know, where do they pass the cost on to? Of course, they pass the cost on to the consumer. Okay, and this is the real big problem. This is also why the market is pretty scared, is because the consumer will be paying more, which means, of course, a rise in inflation. Now, as I mentioned, in 2022, we had a huge inflation crisis. Okay, in many countries around the world, it was in double digits. It got close to double digits in the United States. We started to win that inflation war because inflation is beginning to come down. This is going to add to inflation. Okay, so things are going to get more expensive, which also means, especially for the United States, because the United States is the biggest economy in the world, and we all look to the United States. If the United States sneezes, the world catches a cold. So this is why it's important. And because obviously the US Fed are holding firm on interest rates as well. If inflation starts to rise again, they might have to increase interest rates, which has a knock-on effect, of course, for economic growth because things become more expensive, like borrowing as well. So this is what's spooking the market. And I'll give you some examples. You know, the real fear is, like I say, if we get a full-blown trade war, which with China is looking like we could, it will create economic slowdown. It will potentially raise inflation. And of course, it will put pressure on diplomatic relations. So this is what is really spooking the market to a great extent. You know? Now, like I said, at the moment, okay, this is a slide I did before he backtracked, but at the beginning of February, Donald Trump announced 25% tariffs on all goods from Canada and Mexico. He also announced 10% tariffs on China. He has definitely said he will impose tariffs on the European Union, on the EU. And again, his reasons for this is border security, stopping drugs and trade deficits. I need to put my teeth back in. But like I said, at the moment, currently, as it stands, he has given Canada and Mexico 1 month reprieve before he introduces tariffs. But China, he's gone full in with China. So yeah, that's the worrying thing. That's what we're looking at. And let's have a look at the market, see how the market's reacting. Oh, by the way, as well as this, sorry, following on, why the EU? And I want to look at the euro because the euro I find incredibly interesting. 20 members exported more to US than imported in 2023, according to Eurostat. The biggest surplus was Germany, and Germany's the thing. This is what I want to touch on actually. Followed by Italy and Ireland. Because as we know, Germany is Europe's biggest economy, and more than 30% of all of the EU's transatlantic goods exported were from Germany in 2023. Okay, so Germany's really going to suffer, and Germany's the powerhouse of Europe, which means, okay, obviously this is the country which is going to suffer. And don't forget, the recent GDP for Germany came in very disappointing. So this is a worrying sign. So yeah, this is why I want to talk about the euro. Okay, now, I don't know if you can see my little mouse here. As you can see, it's been on a downtrend for quite a long time. Okay, in particular in November when Donald Trump won, because of course, don't forget he mentioned tariffs, and this is where it is here. When, for example, he got in on the 20th, okay, and there wasn't any instant injection of tariffs on the EU, the euro bounced back up. Okay, so that's why we can see this calendar here. And it was slightly above the downtrend, which has been on for a long time, like I say, all the way back since September. When he did, though, confirm that he will put tariffs on the EU, look where the euro opened. It opened with a gap lower. So you can see how powerful the threat of tariffs or tariffs in general is having on the market. The euro in particular, I'm watching very closely. Some analysts out there believe it could go to parity or below parity this year. I think there's a number of factors against the euro, which potentially could lead to that. Let's have a look at some other things which the market most reacted. This is the DAX, of course. DAX was exactly the same. Soon as Trump said he would definitely put tariffs on the EU, the DAX opened with a gap. So again, we're seeing how heavily influenced the market is affected by tariffs. And the US dollar, of course. Dollar is a safe haven. It is a safe haven. So, of course, again, with the announcement of tariffs, the dollar got stronger against the majors. And this is where the dollar index, on the announcement of the tariffs of Canada, Mexico, and China, and the EU threat, was trading around a 12-month high. It's not trading around a 12-month high now, because like I say, things have started to calm down a bit, especially for Canada and Mexico. They got 1 month reprieve, don't forget. And finally, I told you at the very beginning, I am a gold bug. I love gold. But gold, actually today, is trading at an all-time high. This chart was taken a couple of days ago, obviously. It's trading around $2,872, which is an all-time high. Because of so much uncertainty, because of these tariffs, because the market is so nervous, don't forget, it's called the flight of safety. When things are not looking good, when things economically are looking to slow down, when there's concerns of conflict, the smart money goes into safe havens, and gold is one of the biggest safe havens. Okay, so this is why we're seeing gold now, trading near record highs. Well, no, trading at record highs. Sorry. And in my next little Market Bites webinar, I'm going to do one on why many people think gold is going to go to $1,000 this year, because there's quite a few factors on that. So anyway, any questions at all? Anybody has any questions for me? Any questions? Or does anybody have any regarding gold? Yes. I love the question already. Yes, regarding gold. What's your question, my friend? Don't be shy. Give it a try. There we go. What do you think the bigger image impact will be after the 18th? The 18th, you're talking about, obviously, with the China tariffs coming in. Isn't that around the 11th? It's the 18th. I thought it was a bit sooner than that. Well, look, again, when the Chinese tariffs come in, and they're going to go after, don't forget, U.S. Automobiles, U.S. oil, U.S. liquid gas, and I think it's 15% they're putting on those. When that's full swing, it's gonna have a big impact. It could have a bit of a case of sell the rumor, buy the fact, but I think it will have an impact. I think yesterday, if I was looking at the market had a little bit of hope that Donald Trump was going to have a phone call with the Chinese president. I won't dare try to pronounce his name because I'm useless at saying names. But it never happened, and it doesn't look like that happened. So I think if China follows through and everything like that, we're going to be looking at a lot of uncertainty. Like I said, I'm going to be doing a special webinar next week on gold, because I do think, and there's a lot of people out there looking at gold saying potentially it could go to $3,000. It's not just because of the tariff war either. There's other things I think is in play with gold. For example, China is trying to increase its gold holdings. is what so that's a thing. So look, potentially I think gold could go, like I say, potentially go to the $3,000. But tune in for next week's webinar, and I'll go in a lot more detail about that. Again, that's just my opinion. Again, not to be taken as financial advice, obviously. Oh, you will be the next one. Brilliant, because you're in good company, buddy. I love gold. So I'm a gold trader. So yeah, I look forward to next week. Should crypto not have risen as it's been seen as a hedge against inflation? Of course, it's risky, but still there was a crash. Look, I tell you what, crypto is not seen currently as a safe haven. There was a small time where the market looked at Bitcoin as a safe haven. There was a time when gold, again, I'm talking about gold again. I'm sorry, you're going to get bored of me. Gold and Bitcoin used to follow almost in unison. When there was a potential crisis or potential fear of conflict, gold would go up, Bitcoin will follow. Now, okay, the main driving factors behind crypto, okay, obviously it's a riskier asset, so that's why it's slightly risk off. The other thing is what Trump administration will do in relation to regulation regarding crypto. Okay, because the crypto bounce when he got in or before he got in was all about him making regulations less restrictive to crypto. But because all the talk has been about tariffs and there's been no talk about his opinions on the crypto market or what he's going to do, that's why it's sort of suffered a bit. So that's why it's crashed. It's not considered a safe haven at the moment because it's a risky asset, and plus Trump is not talking about it like he was beforehand. Great question, though. Thank you. Oh, thank you for your efforts, mate. I really appreciate it, buddy. Thank you. It's nice. Thank you. Will these decisions affect the Fed's interest rate decision? What a brilliant, brilliant question. What a great question. Here's the thing. What a great question. Here's the thing. You might have noticed that Donald Trump criticized the Fed for not cutting interest rates. Okay, he's heavily criticized them for not cutting interest rates. In fact, the market last year predicted that the Fed was going to do 4 interest rate cuts. Okay, 4 interest rate cuts. By the end of last year, their last press conference, because Donald Trump got in, they only committed to 2. Now, the reason they're doing that is, yes, they are worried about what these tariffs are going to do to the US economy. Okay, so they do realize this is going to increase inflation. So they're holding stern. They're keeping the interest rates as it is. So yes, all this is going to affect the Fed's interest rate decisions because they're already aware of it. They're looking at it and then going, this is going to have a knock-on effect. This is why we're not doing it. So yeah, great question. This is definitely going to be affecting the Fed interest rate decision. More importantly, it's going to be interesting to see what the job market will do because how this will affect the job market. So that's going to be really interesting. Great question. Thank you. Never get bored of any conversation about gold. Yeah, oh, good, mate. You're in a good place then, because you might get a bit sick of me talking about it all the time. Thank you, sir. Greetings from the Wealth Housely community in Jordan. Well, thank you. Lovely to meet you, sir. And thank you for coming along today. I really, really appreciate it. According to the time cycles analysis, gold would be going up for around 70 more weeks. My target is 3,300 for gold. Like I say, look, I've only known gold to ever go up. Now, again, I'll cover this a lot more in next week's webinar. I've seen predictions from, like, say, Bank of America and other analysts who think it will go up to about $3,200 before peaking and then slowly dropping back, where we get about a profit taking. I think the first hurdle, we're going to get profit taking from like tomorrow onwards, possibly, because it's at all-time highs now. You're always going to get about profit taking. So, like I say, potentially, yeah, I'm not ruling it out. It could go to $3,300. To 2026, you could do. I generally think, with the current climate, and obviously with this trade war threat and with tariffs, yeah, it could definitely potentially do that. That's a great question, though, and great, input. I'm glad you're going to come to the next one, yeah. So we can share our thoughts on the beautiful yellow metal. Excellent. Thank you very much. I look forward to seeing you. And I love this, guys. By the way, I love the interaction. I love people sharing their thoughts. Okay, because like I say, look, I don't know everything. I'm not a guru. I never call myself a guru. I'm just an analyst and educator, but I don't know everything. So I love to hear other people's opinions and thoughts on it, and we can talk about it. It's the whole point of doing these is having a chat and talking away and sharing thoughts and opinions. So that's brilliant, fantastic. Got another question coming out. We are, like I say, we're all. Look, here's the thing. Let's share an opinion. The older I get, the less I know. That's how I tend to see it. So I want everybody's always continuously learning. Okay, we never know everything. When you're young in your 20s and all this, then yes, you can say you know everything, but you don't. The older you get, the less you know. This is why you continuously are learning. Wait for got a couple more questions. Okay, I have two really good questions. How would you recommend beginners enter the fundamental analysis game? I will do a webinar on fundamental analysis. That's what I suggest. I will do one. I will do one because I'm a really big into fundamental analysis. In fact, when I started, technicals were a tiny little thing. It was all about fundamentals. And I am a fundamental trader. So what I recommend, next week I'll do gold, but the week afterwards I'll do a Market Bites webinar on fundamental analysis. I've already got the presentation ready because I'm a big fundamental trader. So that's what I suggest. Come along and we'll have a conversation, not next week, but the following week we'll do one on fundamental analysis, I promise. Another question. Back in October, when gold hit an all-time high at $2,600, it rallied up quickly to $2,700, but rallied down quickly as well. Of course, Trump's return helped it, but then it gets up to $3,000. Do you think it will have a quick rally up to $3,100 or pull back a bit before going up more? Now, usually what you tend to see, again, this is not always, this is not advice, it's not made in concrete because the market acts in peculiar ways. Usually when you see something hit an all-time high, initially it tends to pull back before moving forward. So, you get about a profit taking. The thing with gold in particular, the main things to watch with gold, and it's run to $3,000, is obviously what attempts or what happens over the next couple of weeks or couple of months, should I say rather, how the dollar does. Because obviously a stronger dollar can hurt gold, as well as that is US treasuries. Again, that's down to the Fed, what the Fed does. Because when US treasuries go up, that hurts gold, okay? Because what happens then is investors move their money out of gold into treasuries because they pay interest. So that's the question. But like I say, a lot of times when you see something hit an all-time high, you usually see about a profit taking and it dropping it down again. So that's the thing. It could do that. But great question. That would be really helpful. I am seeing people only entering the market eager to learn. They only attend. Yeah, I think, yeah. Look, great question. By the way, I'll read this question out again because it's really good. What would be helpful would be I'm seeing only people entering the market eager to learn and only learn technical analysis and skip the fundamental part. I totally agree. Okay, because here's the thing: technical analysis is important. Don't get me wrong, it's important, but there is other things to take into account. Market sentiment, how the market is feeling. Fundamental analysis: what makes an asset valuable? What's the intrinsic value of that asset? That's another thing. Okay, people forget that. They think of technical analysis, and again, I underline it is important to understand it, and it's important. But they think technical analysis is like the holy grail. I'll give them the answer to make quick money. But no, investors, people on the stock market, people with big banks, yes, they take into account in some technicals, but they take a lot more into fundamentals. But it's understanding the whole thing, which is important. So that's a great point. And yes, I will definitely be doing fundamental analysis in 2 weeks' time, and I'll do market sentiment as well. It'd be great. We're getting a similar email for next week. Is an invitation next week's webinar. Is there any way to know if it's going to be? Yeah, there will be another webinar again. We're going to start doing this series every Wednesday at 3 p.m. my time every time. So yeah, the email will be going out probably Friday, Monday. And like I've already teased you, already given it away, I'm doing it on gold. So much for your amazing knowledge. What advice would you give traders that could help them in a long-term way? I love to hear advice. Okay. Um, there is no secret method to trading. Okay, I can't tell you the holy grail. What I would, one of the most important things I would always suggest, as well as obviously understand, why things work or why things move or why things happen, the mechanics of something. One of the most important things is to know yourself. I know that sounds stupid. I know that sounds silly, but it is just to know yourself because, like everything, everybody's different. Okay, everybody's different. Some people get overexcited with certain things. Some people have more patience. Okay, by understanding ourselves, we sort of understand, A, for one, if trading is for us, because trading is not for everybody. Let's be honest. And secondly, we understand what maybe trading style suits us. Like if you like excitement and fast action and like movies with, starring, I don't know, forgetting any action, Vin Diesel, for example, Fast and Furious. If you like people like him, you like fast action movies and you like excitement, then maybe scalping might be your technique. If you're more patient and you want to look at the long-term picture, maybe you're a position trader. But one of the things I would always advise is learn a little bit more about yourself. Okay, there's no secret solution to cracking trading. It takes time, and like I say, it's psychology. One of the hardest, and I'll do a webinar on this as well because I've talked about it a lot. One of the biggest battles that everybody goes through is the battle of hope and fear, which is really, really difficult to conquer. But I'll do something on that. Thank you. It's my pleasure. Of course, markets move in waves. After every high, there is a low. Basic Dow theory, of course there is. Psychology, Elliott wave theory is always really interesting, actually, because that's definitely the psychology of the masses. Psychology and personality type impact the decision in trading. You're absolutely right. Okay, absolutely spot on. It absolutely does. Okay, and the difference between, again, I'll do something on this. Difference between a successful trader and unsuccessful trader is a successful trader knows they're going to have losses. They know they're going to have losing trades. Whereas an unsuccessful trader thinks they can always continue to win, and when they have a losing trade, they panic, or they lose their goal and lose their focus. So absolutely right. And again, like I say, I will do a webinar, a Market Bites episode on psychology. Don't forget, as well as that, guys, if I would be publishing videos, which will be going on our One Royal channel as well in the future, and it's on the blog. Okay, it's going to be on our social media channels at some point. And of course, I'll be doing my own live show every day. It's called One Royal Live. And all those shows, you can basically, I talk market updates, I talk what's going on. You can ask me questions, interact with me, and things like that. So we got that as well coming up. Where can I find the PDF file you shared with us today about tariffs? I believe what will happen, it will be recorded and it will be sent straight out to your email address, I believe. Would it be on YouTube, the live shows that you're currently talking about? Yes, it will be. Yes, it will be eventually. Excuse me. It's not part of our our official YouTube channel yet. It's only on the blog at the moment, but we're sorting out our social media stuff, but it will be on YouTube every day. And the idea of these programs, just to give you a little teaser, okay, is that I will be going live, and I'll be going live, for example, probably in about just under an hour's time, maybe like 5 o'clock, 4:45 on the blog. I'll be going live at least once once a day, sometimes two times a day, depending if something massive is happening in the market. I also be doing like watch-alongs as well, which I love doing watch-alongs because we talk and we watch the live events together, which is always quite exciting. I don't see it's a stupid thing, actually, a variable thing, because you don't know how you're trading. You're in trading, you will lost in the middle of the game and you'll be liquidated fast. It's grateful for you the opportunity to ask you and get the treasure important information. You are welcome. You're welcome. Like I say, you're absolutely welcome. This is what I'm here for. This is the beginning of a community we're building, which is really cool. And thank you, man. That's great. That's a great question. Yeah, it's a watch along. It's a watch along where we talk about it. We don't trade, but we watch along. It's up to you what you do, obviously. But it's a watch along where we talk about these events, look at potential scenarios. We talk about it. The live shows really is really about people sharing ideas and talking what they think of what's going on in the market. And like I said at the beginning of this webinar, the market focuses on one story at a time. And that story then dictates what they think, and they talk about it. So it's always a good idea to do a live to when the story changes and when they think about it. Yeah, I really appreciate, guys. I really appreciate everybody for coming along. And these are great questions, by the way, and brilliant things for coming in. I really, really appreciate it. Is there any more questions at all? Okay, don't forget, obviously, we got our little risk disclaimer as well. Don't forget that. And thank you for your time. Let's stop sharing so you can see me. Hope you can see me again. Anyway, guys and ladies, if there's ladies, thank you so much for coming along. Thank you for joining me today. Thank you for the amazing questions. Okay, big shout out, big shout out to everybody who's asked questions and chatted with me today. It's absolutely fantastic. It's the whole point of these shows. Keep an eye out for the live shows, which are going to be on the blog. You can ask me questions on that too, and especially when we're on YouTube and Instagram and Twitter, and we really expand on that. And I really look forward to seeing every single one of you again next week. And like I say, we'll do gold next week. Brilliant suggestion from the gentleman there about fundamentals. We'll do that the following week. And we're gonna have some fun, but we're gonna learn and build a community. Thank you for your time. No, my pleasure is all mine. Absolute pleasure is all mine. Perfect. Can't wait. That's fantastic. Guys, ladies, gentlemen, remember, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I would suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.